Hello, everyone. This is Don Jergler, and welcome to the Insuring Cannabis podcast, a bi-monthly trip into the intersection of two industries that couldn't be more different. Hi, I'm here with Peter Sue with First Central Savings Bank, and we're going to be talking about something sort of new for this podcast, cannabis banking. It's a topic we've covered before, but we haven't really focused on it, and that's what we're going to do. Peter, welcome.
Don, thank you very much. Thank you for having me.
Well, listen, can you start off by telling us a bit about what you do?
Sure. And actually, I do think it's very relevant. I mean, the banking industry and the insurance industry are really kind of similar. And of course, at the end of the day, we are talking about risk. So what do I do? So Cannabis, I run specialty banking for First Central Savings Bank. So I bank and lend to cannabis businesses from a depository perspective as well as a lending perspective.
Well, let's get into the basics of cannabis banking for our insurance and claims professional readers. What do they need to know about this? I mean, no, cannabis is legal now in pretty much most states, but banking for cannabis companies is still far from a straightforward process, right?
Yeah, if we take away, sort of the histrionics, I guess, related with the word cannabis, at the end of the day, there's a very specific reason why banking is constrained in cannabis, for the cannabis industry, rather. I mean, look, it is federally illegal. Thus, by definition, the proceeds of a sale related to cannabis products could be construed as money laundering. And that is a specific no-go, obviously, for financial institutions. So the question, of course, you might say is, well, then how is anybody banking cannabis? Well, the reality is that, and keep in mind, it's a very short timeline. We're talking about, roughly 10 years, let's say. So in 2014, FinCEN, the Financial Crimes Enforcement Network, released a set of guidance cleverly named FinCEN 2014. And that is the Bible by which cannabis banking programs work today. So the risk factor there is sort of interesting because the guidance from FinCEN is not an official set of regs or rule or even law. It's guidance. It's almost like best practice. But having that guidance in hand kind of gives us this air cover that says, well, the regulators are giving us a clear indication. This is what we're looking for if you're doing cannabis. And of course, in the ensuing 10 plus years, we've now seen multiple institutions getting into cannabis banking, several of which are publicly traded and they talk about it on their earnings reports, et cetera. So in other words, we have a lot of data now to go by, lots of precedents where it's easier for us, the latecomers, to say, well, so-and-so is doing it and everything's fine. They're passing their bank exams, et cetera, et cetera. So it's still not straightforward because it's very much a question of risk mitigation. And at the end of the day, you take a risk, you expect a reward. So what is that reward? So yeah, hopefully that answers the question. No, not straightforward, but the reality is people are doing it.
Right. In fact, you would hear, if you were listening to people talk about like dispensaries, you always talk about cash heavy businesses. If you were listening to that and really didn't know much about the industry, you'd think that banking is still overall excluded from cannabis, but not really true, right?
No, not at all. In fact, most cannabis companies that I work with today are less cash heavy. Even the dispensaries, most of them are less than 50-50, meaning they're less cash now. In the early days, yeah, even if you got past all of that, you got past the fact that, hey, it's federally illegal. Okay, I got the board. I have my board of directors on board. We're going to do cannabis. Now you do run into a very specific problem from a compliance or risk perspective, which is the cash. But again, today, 10 plus years later, most companies up the supply chain are essentially no cash. It really is just the retailers at this point that still are heavy cash.
Well, before we get into some of the real technical aspects of this topic, which I know you like, does the ban on intoxicating hemp products have any impact on your customers and what you do? I mean, that just came down and it actually surprised a few people, I guess.
Oh, that's actually a fascinating topic if you ever want to nerd out about it. So short answer is yes, huge impact. There are certain programs certain banking programs that were entirely predicated on the idea of banking these intoxicating hemp products or hemp-derived products. What's going to happen with those programs? I mean, quite honestly, some of them won't make it, right? Some of them might already be at the point where they're thinking to themselves, what should we do? Do we shut this down now? Do we wait? Do we see how this plays out? You know, et cetera. It doesn't impact me as much because my program is heavily predicated on banking the state licensed THC businesses. So the reality is hemp was not a big aspect of what I do. But yeah, for my companies, for my customers that had both sides, that part of the business, a lot of them are already considering shutting down that side of the business. And again, I want to point out, I mean, one of the largest banks in America has an entire division. They keep calling it cannabis, but they're referring to hemp. I don't know what's going to happen with that program.
Right, lots up in the air after this.
Yeah.
Well, now I understand the speaking of things that are a crime, I understand the Financial Crimes Enforcement Network, or FinCEN, right, has these regular suspicious activity reports, which is something we should be probably paying attention to. Can you educate us a little bit on these and the latest trends you're seeing in these reports?
Yeah. So, and again, this is from a technical perspective. Once you've gotten past all of these psychological barriers, okay, it's federally illegal. Okay, we're gonna do banking. Now you do have a very hand-to-hand kind of technical issue, which is it's sort of silly. We do have a very specific report that we file on a regular basis. They're called SARs, Suspicious Activity Reports. Now there are lots of different types of SARs, and in some cases they're very specific to a certain type of crime. In this case, there's a series of reports that they're called marijuana-related SARs. So there's three: marijuana limited, marijuana priority, and termination SAR. So as the name would suggest, right, like marijuana termination, of course, means that you've identified cannabis-related activity, and thus you are exiting that relationship. You're terminating that relationship. Marijuana limited suggests that you believe that this is a state licensed business that seems to be adhering to whatever regs are available, and that there's not necessarily suspicion of crime beyond that. And then, of course, there's the priority, which suggests that there's something more than just quote unquote legalized cannabis going on there. Does anyone outside of banking necessarily need to know that? So for you and your audience, do you necessarily need to know that? Honestly, probably not. It's a very specific banking thing. The one thing I would point out is it's kind of silly, right? Because suspicious activity, you suspect marijuana related activity. Well, in this case, we're collecting a license. We know,
right?
There's marijuana related activity.
Yeah.
But that is one of the primary reasons why, even if you got past all those initial barriers that I discussed, you might just decide, you meaning you're a financial institution, you might just decide not to move forward with the cannabis business because it's a lot of work. So I'll just give you an example. Prior to this role here, at one point I was a consultant, so I worked with dozens of cannabis banking programs around the country. A lot of these banks or credit unions, I would get in there, and prior to installing a cannabis banking program, they might have filed maybe 3, 4, 5 SARs, the prior year, as an example. With the cannabis banking program, some of these guys immediately go to 100, 200, 300 SARs. If you look at the data that the FinCEN finally recently released an update on all these like marijuana related SARs and the data analytics around it, the top 4 institutions are filing 500 SARs a day. That's a lot of work. That's real FTE hours,
Well, more on this FinCEN data. It suggests there were about 800 FLs, I guess. Banking cannabis? I mean, how accurate is that number? Is that big or small? And explain to me what I just asked you about. So
yeah,
I took a cue from you on that question. I was like, well, I need some more education here.
No, not at all. So If you've been following this trend for a few years, you've seen that, you would hear the headlines like cannabis businesses can't find banking, cannabis businesses can't find banking, they're getting their accounts closed, etc. But then you would read the official statistic that FinCEN releases. And FinCEN says that there's about 800 financial institutions banking cannabis. And I think a reasonable person might say, well, 800, that's a lot across the whole country, mind you. That's a lot of institutions. Now, in a percentage sense, relatively speaking, that's a small percentage because there's over 10,000 financial institutions in America, right?
Right.
But still, 800 divide that over legal states, et cetera, it sounds like there should not be a banking problem. And here's where I would step up and say, well, actually, I think that 800-ish number, and as you can imagine, over the years, they've kind of ebbed and flowed. Sometimes it's higher, sometimes lower. That 800 number is hugely misleading for a very simple reason, which we've already discussed, which is the SAR, the suspicious activity.
Right.
Because how FinCEN tracks that number, that 800 number, is they count the SARs. If you are an institution filing, continuously filing SARs, right? And by that I mean you're not filing a termination SAR. Every quarter you're filing a SAR on XYZ company. Well, that suggests that you've decided to bank them. You've decided to continue to bank them, which makes a lot of sense, right? Except, believe it or not, there is no textbook definition for what is or is not a cannabis business. And the second part of that is that there is a downside to not filing a SAR, but there is not a downside to filing a SAR that you should not have filed, that you didn't need to file.
Gotcha. Yeah.
So in other words, every institution that you can imagine will err on the side of caution. So let me give you a very specific sort of anecdotal evidence. I used to be a signer for an organization called Asian Cannabis Roundtable. As the name would suggest, that's a non-for-profit. We do, networking for Asians working in cannabis. Non-plant touching, there's no product, we just do events. I had my accounts closed.
Wow.
So clearly there is no uniform way of like, is this cannabis? Is this not cannabis? Et cetera, et cetera. So what I'm suggesting is that out of the 800 number, a lot of those are probably going to be, landlords, let's say, tech companies, insurance companies, et cetera, et cetera. Like keep spinning that example forward. And I think when you look at the data, if you really dive in on the data, like I just suggested, you can see how cannabis banking is actually heavily concentrated in a small number of institutions, right? If the top 4 institutions are filing over 500 SARs a day, and the bottom half, so 80% of the financial institutions represented in those SARs data, 80% of them file less than 50 a year. So call it one a week. So again, we can do math, right? That means they have a handful of cannabis customers.
They're kind of capital.
Yeah. And again, we don't even know how they're defining those cannabis companies, right? So is that number accurate? Number one, I don't think so, for that very specific reason. I think what might be interesting is, again, relative to your audience, if there is no textbook definition for what is or is not a cannabis business, well, how is that risk being measured? How is that being analyzed? I really don't know is the answer, right?
Yeah, it's kind of a foggy question or foggy answer there if you were to come up with one. Yeah. Well, as I said, when you concentrate everything in the just handful of big banks, I mean, obviously big banks probably have some sort of, the bigger backing. I mean, obviously they're not taking all cannabis risk, but it seems to me when you concentrate risk in one area that the risk is increased, right? Or is that not true?
Oh, it's definitely true. Yeah. Not only that, but the vast majority of institutions that are banking cannabis are, I'm doing air quotes. I know you can't see me, but they're smaller.
Oh yeah.
Now,
they're not giant banks, not like Bank of America, right? Yeah.
Yeah. Now, I mean, look, small, big might be kind of a relative term here, but like, and I don't mean to pick on anybody. They're just the most public example, right? But we know as an example that, Valley Bank has a big cannabis banking program. Now that by definition, I think they're a larger community bank, a regional bank, excuse me. They're what, about 55 billion or so. So, from there, it's a pretty steep drop to the next institution that says they're banking cannabis. If we were to look at the PBC directory, so PBC is a cannabis banking conference that collects a lot of this data, and they release a directory of what they believe to be every publicly available sourced cannabis banking financial institution. So that's banks or credit unions. And if you went through that list and you counted it up, there's only about 50 names on that list. So yeah, like that's probably a truer number than the 800 number.
Yeah. Well, let's turn to New York and what's going on there. The cannabis regulator there in the state's still growing cannabis market comes into play a bit into this. Can you talk about what's going on there?
Yeah, New York. To be fair, I don't know that this is that unusual. Really, this is like, as more and more states have come up, we're seeing at this point that the cycle is very similar. I think what's going on with New York is really just like any other industry that you're trying to launch as a de novo industry. Look, there's growing pains, and the regulator. Not to be cliche here, but the regulator is often has said they're building the plane as they fly it. Recently, and look, somebody was criticizing the agency. They were like, "Oh, do they know what they're doing?" And I pointed out, listen, if you think about it from an industry age perspective, someone like me has an older industry age than the agency, right? So. So what's going on here? Honestly, there are a lot of growing pains, and there's something very specific that happened that that might interest you and your audience. So we, in the early days when our first batch of licenses first rolled out here in New York, all of them were issued as conditional licenses, and when they came up for renewal, would you believe that the renewal process was not ready? Yeah. So when those licenses expired, when the paper licenses expired, there actually was no way to renew it. So what the agency essentially did was they released a memo saying, "You don't worry, Don, you can consider your license valid, even though the paper says that it's expired."
All right. Yeah.
Which is fine, except, as you can imagine, for events for ancillary provider like you, like me, what's our compliance? It's purely based on the status of that license. Now, so yeah, when those first round of licenses came up for renewal and they were languishing in this no man's land, quite honestly, a lot of those accounts got frozen. A lot of them got closed. What's crazy is we're about to see that movie repeat itself because we have these proximity issues where the agency actually approved locations that they should not have, and now 100+ licensees won't be able to renew their licenses, and the agency is essentially saying the same thing. "Oh, don't worry, we're going to take care of you." Yeah. But I'm going to point out that for you and I, when that time comes, I'm going to be looking at a piece of paper, and it's going to have an expiration date that has passed. What's going to happen there? I'm not sure.
It's going to be fun. Give us some content to talk about, right?
Yeah.
So.
Yeah.
Well, listen, Peter, I really thank you very much for being here. I said this is a topic I should have got into a long time ago in this podcast, and hopefully you'll have some time and we can revisit this soon.
Yeah, absolutely. Thank you for having me on. I'd love to come back.
Thank you. Well, there you have it. Thank you for listening to the Insuring Cannabis podcast. You can find other episodes from this series by visiting insurancejournal.tv. Until next time, I'm Don Jergler.